Previously, in OpenJournal, we taught you our primary setup-based approach paired with Elliott wave bias as a compass to navigate financial markets. In this episode, we will focus on making each trader a specialist trading the path of least resistance. Although there are different kinds of traders, we strongly believe that each and every one in OpenJournal should know how to spot, trade, and make money from Wave 3s. The module starts by providing concepts which will help you navigate high probability Wave 3 setups and will end teaching you techniques to filter for relative strength. By the end of this module, you will already be equipped with tools to ride the heart and core of a trend, the Wave 3. Let's begin. Our journey in becoming Wave 3 specialists starts with having a basic understanding of Elliott wave patterns. As you may all know by now, the Elliott wave universe is mainly divided into two parts: motive waves and corrective waves. In order to effectively recognize DCS opportunities, it is imminent to understand wave characteristics. Motive waves are moves which are in line with the direction of the overall trend. On the other hand, corrective waves are retracements against the trend. Motive waves are divided into two main groups: impulses and diagonals. The only major difference between the two is that impulses are those waves that strictly follow the three cardinal rules in Elliott, namely, Wave 2 cannot fully retrace the start of Wave 1. Wave 4 cannot retrace the peak of Wave 1. And lastly, Wave 3 is never the shortest. On the other side of the coin, corrective waves are either a zigzag, a flat, a triangle, or a combination. Three-wave corrections are either ABC flats, ABC zigzags, WXY double zigzags, and WXY double three combinations. While five-wave corrections take form in either A, B, C, D, and E triangles, and WXY, XZ triple zigzags, and triple three combinations. What identifies a motive wave the most is that it is always a five-wave structure. I repeat, motive waves should and are always five-wave moves, while corrective waves, as mentioned, take form in either in three or five waves. In order for us to simplify the discussion in this module, we will temporarily disregard five-wave move corrections and focus on 5-3 DCS format. By nature, Elliott wave analysis is highly subjective. The purpose of wave characterization is to break down the DCS and deconstruct it into objective points. Take this bull market for example, with a 1, 2, 3, 4, 5, A, B, C, or WXY pattern. The corrective pattern possibilities are either a zigzag, a flat, a double zigzag, or a double three combination. Although these patterns take different forms, we can reduce this sequence into a 1, 2, 3, 4, 5 A/W, B/X, C/Y structure. This is important to note because in any combination of this DCS structure, there will always be a larger 5-3 wave relationship in place. Zooming in, if we take a closer look, there are interesting objective points that we can see in the following subwaves. The first point is that inside the larger motive wave, waves 1 and 5 can either be an impulse or a diagonal, while wave 3 should always take the form of an impulse. If this is the case, therefore, waves 1, 3, and 5 should always be 5 waves, whether wave 1 takes the form of a leading diagonal or wave 5 with an ending diagonal. This rule always holds inside a bull market. 1, 3, and 5 always have 5 waves. The second point I want to make is that waves 2, 4, A, C, W, and Y are where the subjectivity of Elliott wave come from. This is because these waves follow different forms and different structure, with a 3 or a 5 wave structure at any point in time. Therefore, these waves take a minor role in characterizing a reliable DCS formation. However, they are still crucial in identifying Fib relationships of the DCS as laid down in our Fibonacci framework. The third and last point is that wave B or wave X is always corrective, whether wave B is inside a flat or a zigzag, or wave X is inside a double zigzag or a double 3 combination. It always follows that this part of the trend should always be subdivided into its own 3 waves. It can also be observed that all wave B and all wave X's are in the same direction as the motive wave, meaning inside a bull market, this corrective structure is pointing upwards. Now that we know these pieces of information, we can focus our analysis in determining the fixed part or the constant part of the wave 3 equation. In summary, when combining these 3 points mentioned, plotting potential wave 3 DCS is as simple as number 1, identifying 5 wave moves with 1, 3, and 5 subdivided into its own 5 waves. Number 2, identifying a clear 3 wave move in the same direction of the general trend. And number 3, drawing a line connecting the end of wave 5 to the end of wave B or wave X.